evening, everyone. Welcome to the Hurley Investments Market View Commentary for the first week in February, the 6th, 2024. I've got a couple interesting things tonight I want to share with you, but I'm going to start out with number one. What do you want out of your life? And I think this will relate to investing. This relates to life in general. For some of you guys that have known me, I want a lot out of life. But one of the things I want in life is I want to see those things that very few people see in the world. So a lot of what I have done have been outdoor camping, wilderness survival, things where I get up to the top of a mountain that maybe 1/100 millionth of the population of the world gets to see. 0.000000001. 1/100th of a million, where 1 out of 100 million people might see that place in their lifetime. Those are some of the things that I've done in my life to prepare myself. For me, it's been about family. I don't know if you can see that at the top, but I kind of like it. Warning, danger, ski area boundary, no ski patrol, avalanche control beyond this point. The area beyond these signs is not patrolled. Avalanche danger and other hazards exist. Travel at your own risk. You are responsible for your own rescue. It's kind of neat that I've taken my 4 boys out of bounds ski area. It's the same with the market. Avalanche danger, there's market danger, and other hazards in the market exist. You're traveling in the market at your own risk. You are responsible for your own rescue, which is why we collar trade. And I'm going to bring that into an explanation here in just a minute. Pretty neat to get to some of the high Uintas areas or New Mexico, where it's only me at dusk in an amazing little lake hidden within these plateaus. Nothing like hiking along the boy, I think this one is the Havasu Pi Indian Reservation, hiking down to see those beautiful waterfalls. Nothing like getting out in nature with the family. Top of Alpine, high Uintas. We're only at about 7,000 feet, but looking down on our houses in the valley, getting to spend time with only our backpacks for the night. If you want to see funny, I just got to show you. If you want to see funny, look at the far left. How happy do you think this kid is? Right there, knowing, hey, no food, we're going to find our water, we're going to build our shelter, we're going to find our own food. How happy do you think that kid is out of the group? That is the discussion. The discussion is, if you look at my wife, you look at Scott there on the right, you can see the girls, you can see Tad on the red shirt. He's like, this is going to be hard. You can see Taylor in front of my wife. You can see Jared on the far left of that picture saying, this is going to suck. This is not going to be good. And the understanding is, whatever you want out of that life, what are you going to do to earn it? And that's the question. A lot of people have asked me, hey, what does it take to trade like Warren Buffett? Hours, of weekly study, weeks of working the numbers, and the worst, patience above all. For him, Warren Buffett, it's very easy to be patient. It's ridiculous. But let's just call lesson 6 putting in the work for economic and earnings events. If you don't know what's going on, you have no business being in the market. Most educations start with fundamental analysis, technical analysis, sentimental analysis, economic events, earnings events. This is the work that you put in to being successful in your investing. This is the work that has no timetable. Keeve and I were arguing with each other today. Boy, we could have done this, we could have done that. Yes, there are a lot of woulda, shoulda, couldas. But this is one of the basics. Level 1, this is the first thing you learn when you get into an education. And this is the number one thing that people don't do is level 1 work. Sentimental, technical, fundamental, economic and earnings events. You've got no right being in the market if you don't understand where the market can go and why. I spend a lot of time on briefing.com. It's for free. In the upper right-hand corner, you have calendars, and you have economic calendars, which you can go for the week. Notice how there's a bunch of other weeks out there. You can go 5 weeks out into the future, and it has all of the economic information right here. It takes more than just looking at it. It takes writing it down and paying attention to it. You'll notice I didn't put in the ISM non-manufacturing PMI so I could show you, even though I have it in mine. For this week, I have in here, you can't see it, but I have in here where I would write ISM, and they call it non-manufacturing. Back in the day, it used to be called services. At ISM manufacturing, and you had services. And I'm freehanding this, so it's kind of weird. And then I just take this up, and the expectation is it was supposed to be at a 52.0. Anything above 50 shows expansion or growth in the services ISM survey that they do. Today, it actually came out at a 53.4, which came out significantly better than expected. If you noticed this morning at around 6 a.m. Mountain Standard Time, an hour and a half before the market opened, our market go from being down 34 to only being down 0.19. It cut it in half because it was good news. Reading through information this morning. Wednesday, trade balance, negative $62 billion. Consumer credit, I pay a lot of attention to this. For banks, $16.3 billion of new consumer credit is expected to come out. I literally have prepared this whole week for what's going to happen and why. Now, I've already put in what it's supposed to be. As you go to briefing.com, you can find non-manufacturing, The consensus was supposed to be 52. Came in at 53.4. Trade balance 62. We'll find out the actual tomorrow. Consumer credit 16.3 billion. We'll find out the actual. Initial claims, people that have filed for unemployment, 218. We'll find out the actual on Thursday morning. You can also go to, you can sign up for free and you can go to earnings, where you find out Ford is tomorrow after the market. You know what? Let's go to Wednesday. Wednesday's a little more. Wednesday's Disney. So you scroll to Wednesday. A lot of information. Wednesday's after the market close. Go down to the bottom. Walt Disney. The consensus is that they'll come in at $1 per share, $23.732 billion in revenue. That's the expectation for Disney. Every week, I'm writing this stuff down. I'm following it. This is last week's. Thursday, 224 instead of 212. ISM manufacturing came in at 39.1. That beat. We had Meta. Meta came in at $5.33 versus $4.89. 40 billion and 111 million versus 38 billion 999. Little arrow tells me we were going up. Every day I'm filling in the side to see if we're doing better or worse, to see what matters. I have it. This stupid planner is literally my life. It's what I'm going through to follow through with phone calls, with people I'm talking to, with Microsoft earnings, General Motors earnings, Google's earnings, Starbucks' earnings, Boeing's earnings, MasterCard. I'm going through daily on putting in the effort to understand literally what's happening and why. Every Sunday afternoon, I'm spending an hour to 2 hours putting in my next week. I've got this out 4 weeks out in time. And I go back a couple weeks to see how the market worked on certain days. You've got to put the time in to understand what these economic events mean. How important are what reports are more important than others? How important is consumer credit? Why does it matter? What's the big picture to understand it? It's this type of understanding, and it's this type of studying that you have to be doing on a daily basis to get to where you want to be. Anyone can do what Warren Buffett has done. Anyone can create your spreadsheet. Anyone can take a look at what's happening. In fact, Meta, we actually had a 30. But anyone can go through and take a look and do the work if you just want to spend the time to do it. For those of you that have taken education, you're trying to do it on your own, it's this type of commitment. And unfortunately, trading on your own cannot be a hobby. It's a job. I've yet to meet a successful hobbyist in the stock market 2 years in a row. Which brings me to Meta. Meta had ridiculous earnings. Not only do they have ridiculous earnings, I snapped just a quick little picture of Meta. And this is funny because this is what you're going to see. For those of you that have 600 shares of Meta, and about 11 of you are in Meta right now, you would see a profit of $106,000. And in this particular account, it's kind of interesting because in this account, we have, I wrote it down, we have Apple, we have Baidu, we have Disney, we have Meta, we have Micron, we have Under Armour. So let me start by understanding this position. We actually started with something around the lines of getting into Meta at $295. And we only did 300 shares. Reason why we only did 300 shares is because 300 shares times $295 is roughly, this was the dollar price, and Meta was supposed to go to like 350 or something, but it roughly was an $88,000 investment. Kevin, why didn't you put me in Meta? Well, if you didn't have an extra 88,000, which really was closer to 91,630, because we needed protection, you probably didn't go into Meta. Doesn't mean we didn't do some leap long calls, but nothing like getting into Meta at around 295, expecting this huge increase in Meta to then have the stock fall all the way down to $120-ish. It was awful. But if I was to take right here and start to underline, how many shares of Meta do we have today? Which is roughly, this is a 2-year trade. How many shares of Meta do we have today? Got to get you guys engaged, asking more questions so you'll get it. I'll kind of take it in yellow because that'll help you. How many shares do we have of Meta today in this position? There we go. Thank you. We have 600. Bill said you can't see it. All right, we'll erase it. We have 600. Pretty neat. As Meta has fallen down, we doubled our share count or added 300 shares, 100% paid for by long puts. It's funny because the cost basis says 168. The real cost basis, when it's all said, it's really at about $101,000. The real profit in this, well, Kevin, the difference is like 74,000. That profit was from puts that you've already paid taxes on over the last 2 years. Let's do some simple math. Actually, I'm sorry, it's 275 divided by 100. I wrote it right. It's a 272% return on investment in one position. A lot of people have asked me, well, why am I so excited? Baidu has a 350% potential upside. Disney has 122% potential upside. Micron has an 80% potential upside. Under Armour has a 250% potential upside. We've had one position that took off that we've doubled shares on. And this account with Meta, Apple, Baidu, Disney, Micron, Under Armour, we have 4 other positions that have the opportunity to do exactly what Meta was doing. In this account, if you had 600 shares, around $575,000, in this account on one single day, the account was up, I don't have it. I believe the account was up 8.62% on a single day, even though the market was only up 2.5 for the year, 8.62% for the single day. I'm excited. We're going to go over this more on Thursday. I'm excited because this is how collar trading works. When you're wrong and the market won't follow tens of hours, hundreds of hours of study and working, and Disney loses half its value, and Baidu loses 80% of its value, and Micron loses half its value, and Under Armour loses 77% of its value. This allows you to be wrong, and they'll have positions when they do realize what their numbers should be, come back and be amazing returns in your portfolio. For the S&P to be at 272%, anybody have any ideas how many years it has taken for the S&P to get up 272%? Someone take a guess. How long has it taken the S&P to get up 272%? 10 to 12 years? Well, if you want to go from the lows of 2008, right, where the market lost 38%, it's going to take longer than that. 100 years from Mod. Nope. ADP, 5 years for the S&P 500 to go up 272%. My calculations came out to roughly 26 years. And for most people, when you enter the market, you're looking at, remember, it took you 12.5 years just to get back to break even from 2008, and you had a crash in 2000. So it actually took about 272% return, would take the S&P 500 roughly 26 years to get that kind of return, which is why we're trading in individual stocks. If you only have 30 to 35 years being vested in the stock market, then you don't have the opportunity to get these kind of returns if you're just in the S&P 500. This is why we're doing what we're doing. This could be a year for accounts to be at 40, 50, 60%. I'm really excited about Disney on Wednesday and Under Armour on Thursday. Baidu in a couple weeks. This could really be a February where total account values are up 20% on the year in a 3 to 4 week period of time. That's why we're doing what we're doing. Are there any questions? If you have any questions, please ask now. I'm going to move on to the big picture. I giggled on the comments here. What it all means for the Fed saying that it's going to take a while. Supposedly last week, the Treasury Department calmed the market's nerves as it did in October. The Fed's decision to sit tight its monetary policy and wait for more data before making a move is what it's done since last September. The most mega cap companies continue to show their earnings results why they are investing favorites, according to premium valuations. The economic data on balance continues to refute recession calls and continue to show inflation, welcome inflation trends. It's still a mega cap market, or it's still a market to look for. It is still a market for large cap companies to significantly beat market expectations. If we have Disney and Baidu move, you honestly could see your portfolio up 30% in a 4-week period of time. If we could see Baidu, Under Armour, and Disney move, you could see your portfolios move as much as 38% to the upside in a single month. These are the opportunities we're looking for in our stock market. And we had just one here the last couple days where we had significant movements in portfolios. Okay, where our markets end this week, it started out low, but I'm going to go with higher. Higher again because of earnings, and higher because we have very little economic data coming out. Looks like we might have a question. Let me check that really quickly. Good question, Russ. And I discussed that the other day. So Russ actually had a question. I want to bring it up for the group. If an account is up 20+% in a month, what is the plan to hold that value for the year? So in some accounts, I can cash in the profits. But I've got to be careful because those are retirement accounts. In retirement accounts, I can cash in the profits. As I said last week or the week before when I was going over goals, we want to hit 7.75, we want to hit 15, we want to hit 20. When we hit 20, everything changes for me, where it becomes protect those profits, where we might run protective puts the whole year through. We might be in full collar trades the whole year through. We might be at a point where you're going to have at most 3.25% risk in your portfolio for the whole rest of the year so that we protect those profits. That's what we would do if we're up 20% plus in a single month. Whole mindset changes for protecting those portfolios through the end of the year. Okay, in a week, the Dow Jones Industrial Average is still bullish, but no longer touching the overbought. We have some wiggle room to the upside. The S&P 500, no longer just touching overbought. Again, we've got a little bit of wiggle room to the upside. Same thing with the NASDAQ. In 1 week, came all the way down to the 50 line. We've got more room to the upside. For those of you that may not understand what I'm looking at, we're looking at right here. And the opportunity that we have right there, technically speaking, to move a little bit higher. All right, what else do we have here? My expectation was to be up in January, 3%. I think we finished at 2.86. If I'm going to change this to February, I would go right back down to thinking we're still heading higher, but I'm going to put this one significantly lower at just 1%. Partially because it's a short month, partially because we're on the back end of earnings, and partially because we don't have any more of the Magnificent Seven that are going to be reporting. Earnings for this week are listed here. For us, we're going to pay more attention to GE Healthcare, which reports tomorrow. Eli Lilly reports tomorrow. Imogen reports tomorrow. Snap reports tomorrow. Yum China reports tomorrow, and Ford after the market hours. Wednesday, Hilton, Yum, Mattel, CVS, PayPal, and Disney. We'll be paying we'll pay particular attention to Disney. And then on Thursday, Duke Energy, Hershey, Hog, which is Harley Davidson, Ralph Lauren, and Under Armour. Obviously, we'll be paying attention on Thursday to Under Armour, and Pepsi on Friday. Very low, non-important week of economics reports. Consumer credit. And make sure I didn't miss anything else. Yep. So it's really a news-driven, earnings-driven week. Someone asked me, and I'll answer that as a question. Someone asked me, why didn't we put protection on Friday for Meta? Took it off. Why didn't we put protection on out higher? Didn't you know there would be some kind of profit taking? And the short answer is, we thought if there was profit taking, it would have happened the day of. So because it didn't happen the day of, we did not put protection on Friday. We did put it on first thing today. We made money on the protection today, but Meta only might work, sideways, build a bit of a base for the next week, week and a half. And then our expectation is for Meta to be up at 500 relatively quickly, extremely quickly. In fact, as we went to our chart, and if I pull Meta up to the very top there, number 19, Meta's paying a dividend, which gave it almost $100 of upside opportunity for it to now be in dividend funds. Let's face it, the dividend is 50 cents. It's 1/1000th of 1% of the stock price. But now dividend paying funds can put Meta in there for the stock appreciation. The dividend is worthless. It is not worth anything. But now these dividend funds that have the dividend, they're going to offset losses, blah, 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 blah. Now I get to put Meta in there. It's roughly it's actually like $110.10 of upside opportunity because Meta is now a dividend paying stock. And they've got $83 billion for stock buyback. You can now make an explanation or a justification that Meta could have a 35 PE. If we do a 35 PE on a 17.69 next year's earnings, we're increasing the PE by roughly 16.66%, which is the value of buybacks and dividend paying funds. A new target price for Meta is now $619.15 for the year. That is what Zuckerberg did to his company to protect his investment in his own company. Brilliant. Absolutely brilliant that he was smart enough to do that. I do have this spreadsheet. If you have not yet downloaded it, go to the handouts. This will be the last week that it's probably here. Go to the handouts and you can download that spreadsheet. Very interesting article, and this one was brought to me by one of you guys. Read it. I don't necessarily agree with it. It talks about artificial intelligence. Please understand, most artificial intelligence right now is truly just a stock screener. It is not something that really does think for itself. If you look at stock screeners, they put 7 or 8 criteria in to buy or sell. You never take advantage of long-term capital gains. In fact, one of the best companies that does AI is out of Denver. I'm not going to use their name, but understand, if you choose to use AI, if you choose to use robo-traders, your taxes will be in that 33 to 37% range, period. And it's taxable not only on what they supposedly do for you, but your earned income. So if you choose to use AI or you choose to use robo trading, it's all short-term capital gains, and it affects your yearly tax rate. It affects it pretty heavily. Yes, I am speaking from experience. All right, great article. Do read through it. Fed Chief Powell says March rate cut is not likely. I think you heard this back in December, and more importantly, 2 weeks ago on Hurley Investments. That means we're looking at May, June, and July for your rate cuts, because the Fed is not supposed to affect the election. It really only leaves them May and June. If you thought there were going to be 6 rate hikes of 1.5% to 2%, this changes that outlook significantly. It also changes the returns for this year significantly. The numbers didn't make sense to go any more than that. Metadata is first paying ever dividend, authorizes $50 million buyback. I just put some information here so you can understand Meta better. And then I found an interesting article here locally, the uphill battle for Americans, workers, and the push for retirement savings account. It's kind of funny because they want to give people this retirement savings account for Americans Act. And it's already in place. It's already in place through a SEP IRA. It's already in place through a defined benefits plan. Talk about, again, the ridiculousness and the stupidity of politicians. They are creating an RSAA, which is already in a SEP IRA, already in a solo 401k, is already available through a defined benefits plan. And all 3 of them offer better savings opportunities for you with better tax breaks for you as well, because that income is not taxed until you pull it out of your retirement account. I'm shocked at the stupidity of politicians that are trying to create an RSAA account, that there are 3 other opportunities for individuals with a better opportunity for a return and better tax credits than the garbage and BS that the politicians are putting now out there, primarily to win your tax votes. If for any reason someone is going to vote for someone because they're pushing for an RSAA, you don't understand what they're trying to offer you, and you don't understand what's already available. It's a joke. It's an absolute joke. With that said, what questions do you guys have that I can answer if I haven't already answered it? Russ, did I answer your question? And Lance, did I answer your question? If not, I will call it a day. I hope this is helpful for some of you to understand collar trading a little bit better, and why I was so excited last year thinking some things could come back They didn't, but we kept holding on to our own. If you're one of the 11 that is in Meta in stock ownership, you got a ridiculously good day. But if you're not, don't forget, we probably had you in a spread trade or a couple spread trades. So yes, you are still participating in Meta, just not at the same degree as those that had an extra 91,000 sitting in their accounts. All right, guys. Hey, have a wonderful evening. Pleasure being with you tonight.